then we will have a better session. I will look out for your comments and I will just quickly take a look there. Okay, I can see the ET moderator has joined in and we have some around 120 people watching so far. All right, I don't see any problem with the voice, and I think if there were any issues we would have been notified. No problem. Okay, so how do you adjust your strategy as per swing trading? Assuming most of the people who are going to attend this session have a strategy with respect to swing trading in the stock market. Now, swing trading, why swing trading? Firstly, see, swing trading is a very attractive way of generating alpha. Now, what is generating alpha? Basically, trying to make a return in the market which beats your benchmark of choice. It can be the Nifty 50, it can be the Nifty 500, it can be sectoral index, it can be a market cap based index. Entirely depends on your primary trading strategy. Now, swing trading, or as it is also called momentum trading, happens in a place where your playing field is very different. That is the stock market. Now, what do I mean by that? So, in order to explain that, I'm going to show you the charts in a bit. All right, so let me make one adjustment. That's good. And let me switch this to weekly. And now what you will see is my trading charts. So this is basically my trading view software that you're seeing on the screen. This is what I use to study the charts day in and day out. And what these lines that you're seeing, these bars that you're seeing, this is the Nifty price action, and the lines that you're seeing are moving averages. I have also the volume on the chart, and there's only one indicator other than the exponential moving averages, that is RSI. Now in this weekly time frame, what you can see is, firstly, here we can see some uptrend, we can see some downtrend, and we can see some sideways consolidation. All the movement that Nifty has given ever since it started trading since the 90s is one of these three. Now within each, all three happen at the same time. For instance, this is the monthly time frame. If you look at the monthly time frame, there has been only one trend, that is the uptrend. If you look at the weekly time frame, you might see some consolidation, some downtrend, you might see some uptrend. But when you go down to smaller and smaller time frames, for example, daily, 75-minute, 15-minute, 3-minute, you see more and more trends coming up. Now, if we just take a small section of what we saw on the weekly time frame and analyze on the 3-minute, you will see some upward direction, you will see some movement in the downward direction, you will also see some movement in the sideways direction. So in order to have a swing trading strategy, the first thing you have to do is determine two things. Firstly, what time frame do you want to trade in? That is, how long do you want to hold your positions? Do you want to do intraday trading? Do you want to do mid-level or mid-term trading, like the one that I do, where you basically buy a stock, hold on for 2 weeks to up to many more weeks? It can be up to 6 months. Or do you want to be a long-term trader, where you're just buying a stock and holding on to it for many years? Now, if you're attending this session, then my guess is that you're like me and you're more interested in the mid-term trading. So for that, we will take the 75-minute time frame as our basis of discussion. Now on the 75-minute chart of Nifty, what you can see here is that no matter whether I go forward or backward, we can always see all of these three types of movements in the market in play. Now, naturally, when the market has already fallen so much, now this is the COVID decline that you're seeing, market fell around 40% in a matter of just a month. Now, when a market is in a downtrend versus when a market is in an uptrend versus when a market is sideways, the same strategy cannot work. And in the market, our focus should be to improve and take our own trading to a level of consistent outperformance. In order to do that, we have to do two things. Firstly, identify what is going wrong in our own trading, and secondly, improve what is going right in our own trading. How do you do that? You do that by way of maintaining what is called a trade tracker. Now, a trade tracker is nothing but a simple Excel sheet or Google sheet where you keep track of the tradings you do. A lot of you might think, why should I do that? I mean, my broker already provides me with the history of my trades. That is true. But the advantage of having your own trade is that you can actually study that data. Just the way we try to study the market data in order to draw valuable insights about what the market might do, we need to study our own trade execution data to identify places where we can bring on improvement and become better traders. So I have told this a lot of times in my past sessions also, that we as humans have a tendency to firstly, there is a plethora of biases which impact our trading. Secondly, there are things like our own ego, our own fears and our own biases, which again make things worse for us. So for instance, you might have done a very good trade, you might have gone in with a very good trade setup, but because that trade setup gave you loss and because you did not maintain that trade tracker, you might not know that that was a good strategy and it was market risk which took the position out, and it was a very fair trade. In fact, it was a good trade despite of the fact that it did not give you profits. Yet you might end up rejecting that strategy because it did not give you enough profits over time, right? Now, this is what I mean. So if you're a momentum trader like I am, and if you're not adjusting your momentum trading strategy, now your strategy can be anything. It can be based on moving average crossover, it can be based on a combination of few indices, indicators, it can be on the basis of price chart pattern recognition, whatever it may be. Now you obviously within your trade setup, you have some way of deciding your exit strategy. Now exit again can be in two scenarios, where either your stock has gone up or stock has gone down, right? So stop loss or target. Now in order to decide either of them, you have some strategy. Now both of these strategies for deciding firstly your entry and exit. Under exit there are two categories now. You need to have very clear mindset about how you're going to deal with that, and all of that mindset is going to be different for different market dynamics. Let's talk with some examples. Let's take this. Okay, so we'll move a little away from the COVID period because that was an outlier. That is not how the market usually behaves. So let's take this section. Usually the consolidation is a very difficult moment in stock market. So we'll start from the point here on 29 January, where we can see there was one nice uptrend and then some downtrend and sideways movement. So we'll talk with Nifty as an example, but remember this also applies to different stocks. One more thing that you have to remember in the discussion is that even though I'm talking about Nifty and we are seeing that Nifty is given a 11% movement over a matter of just 15 days. Now remember that this 11% will manifest itself very differently in different stocks. For example, stocks which have very high beta, they will have moved easily 30 to 40% in the same period. Stocks with very low beta will have most likely matched the index. Stocks with different market caps will also have given different range of movements. Now again, how this directional movement, so Nifty going up broadly means that the market has gone up, but within the market there are many different sectors, many different industries, and stocks belonging to different sectors and different industries don't move in the same direction with the same velocity. So this 11 or 12% movement on the upside in Nifty will manifest itself differently across different sectors, different market caps and different industries. So that is something that needs to be taken care of. But looking at Nifty, it gives us a very good indication of the broad market. So here Nifty has moved around 12% in 15 days, right? Now my objective as a swing trader is to capitalize on this positive movement. Now of course I am talking with a hindsight bias, okay? So let's do this. Alright, so we've now gone to the past and we can no longer see that Nifty has broken out. However, we are looking at the 75-minute time frame, we are on the 1st of February 2021. The market has given a massive upside and the prices have now come back down to touch this 200 EMA on the 75-minute time frame, which has happened after a very long time. So since 2nd of November 2020, this is the first time that market has come back to retest this exponential moving average 200, which is a very important one, by the way. Now let's make some observations. Now on the 75-minute time frame, so I've already seen that we are at the 200 EMA, so the market has already given a pretty healthy correction. If I look at the RSI, I can see that the RSI is right now at giving a negative divergence. After giving the negative divergence, the correction has pretty much taken care of itself. Secondly, you might be able to see that there are these trend lines on the chart. The price has already come and touched this trend line. Looking at the recent activity of the index, I can see that the index was in very strong uptrend and this is most likely a dip. So I will move one more time frame lower, and on the lower time frame here itself, this line that you're seeing, this blue line, is actually the RSI of the 15-minute time frame. And on the RSI of the 15-minute time frame, what I can see is that there is a positive divergence over here, which means that the lower time frame is indicating an upside. So I have two items of support, that is the trend line support. There are three items of support. One is the trend line, one is the EMA, and one is the 75-minute time frame, which has come down to the level of 30 in a bull market for the index. So this becomes a very good place for me to think that, okay, I'm sitting on a lot of cash because I'm a long only trader and it's a very good time for me to enter markets. So what would be my next strategy? My next strategy at this point of time, when I expect the market to give a good upside, would be to come up with stocks which are most likely going to give a good upside. Now, let me also remind you that all of these things take a lot of time, take a lot of study, and take a lot of energy. Okay, I mean, unfortunately, there is no easy way of doing it. There is, no other way but the long route. So the first thing that I need to be on top of is which are the sectors which are going to give a good upside for this. So as a technical analyst, what I prefer to do is I maintain a list of all the sectoral indices, and at any point of time, I know which sector index is doing what. Basically, is it approaching a support? Is it about to give a breakout? Has it reached a resistance? Is it looking indecisive? I know those things. And once I know which sector I need to look into, then I can get into that particular sector's component stocks and try to identify ideas. Now for each sector, as you can see, I also maintain a separate watch list. So once I have identified my broad market, so look at the top-down approach that I'm talking about here. First, just start with the top-down. Is the market coming in a position, or is the market positioning itself in a way where I can take most advantage of it? So what is my position, my most advantageous position? I am a swing trader and I trade long only strategy. This is my strength. This is my area of focus. So when I can see that the market is coming into that same setting which I can play to my advantage, I instantly get into motion, and I will first start with identifying the sectors where I can scout for opportunities, and then I will go into the watch list of those individual sectors and then scout for individual opportunities. And once I have the watch list of those stocks which usually do not exceed around 30 to 40, I can then start going into them and identifying potential trade setups to execute. So sometimes there will be stocks which move ahead of the market. So for instance, this is the 29th of January 21, right? Now there might be stocks which have already started moving up, anticipating a change in the market. Now I will not chase those stocks which have already given a breakout and started moving up, because I am not interested in going after stocks which have moved. I only want to participate in stocks before they rally, not after they rally. So I will wait out. Now here, once I have identified the sector, identified the stock, and identified my trade setup, so there are different watch lists also. For instance, Wherever I can see that there is a potential building up, I will build them up in potential, put them down in the watch list called potential. Wherever I can see that the stock in is showing a ready opportunity, like already you can see there are 48 stocks in that watch list, I will put them down in opportunity. Once I take them, I take a good position in them, I will move them to this watch list called longs, where I have active positions already. Right. So if you are someone like me and interested in doing swing trading, if you want to do it independently, you have to go through the painful method of doing that. Now after all of that is done, the market starts unfolding itself, and this is how it unfolds itself. It moves up. Now I continue to follow the market, right? And as I follow the market, I can see that something has happened here. The first thing that I noticed was the 15-minute time frame went all the way up to the level of 80, and after that it gave a negative divergence even though the price formed a higher high, right? The 15-minute time frame formed a lower high, and so did the 75-minute time frame. Again, the price on Nifty has come down a little bit, taken some support at the level of EMA. The yellow line is the 50 level. So here my strategy will change slightly. I will no longer look at indices, and I will no longer look for opportunities. In fact, my focus is now to manage my active positions better. So what I will do is I will keep going back to my long list, my list of long stocks. I will keep going to my trading account, and I will make sure that my trailing stop loss is tight always. For this purpose, I also like to use my trade tracker. Now, the tracking sheet that I use for my self and my clients, there I have a dedicated column of stop losses. So whenever I update a stop loss level, I make sure that I enter that level there. So even before I open my trading account, all I have to do is take a look at my trade tracker, and it tells me how far any particular level of stop loss set is from the current market price. Now, of course, this trade tracker also shows the last traded price of the live trading price of any stock. And when I see that the stock price is 5 or 6% away from the stop loss, that means that the stop loss is too big. I need to make it tighter. So I will go at that particular stock's chart and adjust the stop loss. Soon enough, the stop losses start getting triggered. I start accumulating more cash, reducing my positions, and start looking for the next best thing to do. Now, as the market starts unfolding, what I can sense is the market is going into some sort of consolidation. Now, when the market is going into consolidation, that is a very tricky period. Now, what you need to do when the market is in consolidation is conserve cash, focus on risk-reward ratio, and make sure that you're not abandoning your trading strategy just because it is not giving you good results. So consolidation is usually the most common time where people start looking for new trading strategies, thinking their strategy is not good enough. But honestly, if you've done enough backtesting, and if you've done enough personal and first-hand analysis, that is not believing other people's word for it, but you've sat down and studied the historical data to see whether or not your chosen strategy is giving you results, your strategy will do good. You just have to be patient with it. Okay, so now the market is going into consolidation, and like I said, you have to be very selective about which stock ideas you need to participate in. This is also the period of consolidation is also a very good time to go back to your trade tracker, your trade history, and study historical trades, because usually when the market is in such a strong bull run, we don't get the time to sit down with our past trades, because we are more engaged in analyzing and looking for new stocks to participate in. During uptrends, strong uptrends, of course, we also don't want our cash to be lying around. We want to stay as close as 100% as we can stay invested. At least that's my strategy, for instance. And when the market goes into consolidation, like the one that is unfolding here, the focus is not to stay invested 100%, but rather to make sure that whatever participation we are doing, we are not letting unnecessary losses accumulate in the portfolio. Because here, if you're not very regular with your risk management, it's very easy to let losers bundle up and accumulate in the portfolio. The problem with that is that even though in our mind we're thinking that we are waiting for the break-even price to come or a better level to come to exit, if in the first place we have broken integrity and in the first place we've let that loss to accumulate, we will not be able to stop that slide in the future, and it's only going to get worse. And that is what usually happens with a lot of people. Coming back to the chart of Nifty, we notice here that this high has been breached and the consolidation is sort of come to an end. But as we can see, the market has already gone to a pretty good level. So here, if you look at the moving averages have all clumped together, and now they've started to bloom out again. But we'll wait for the market to kind of take a dip before we make for a good entry. At the same time, because we know that the market is already setting itself up for a fresh rally, we'll go back to the indices, sectoral indices, and look for potential opportunities. So I'm going to end this one now because I think I have explained the point that I was trying to get at. Alright, so like I said, it is very important to make sure that you're adjusting your strategy according to the market dynamics properly. And today was the first part where I just wanted to introduce this session in a more elaborate manner, and so each session is around 35-40 minutes, and since we are already down to 25 minutes, I think you probably already know what we're talking about when we say adjusting your strategy as per market dynamics. Now I will do a part 2 next Monday on the same topic. If you're interested, do be around for that one. Right now I will now take a look at your comments, and if you have any stock queries for me, I will move on to analyzing those stocks for you on the charts. Alright, so we already have some guests joining the session with us, and we have quite a lot of stock queries. So we have Amit Khanna ji, good afternoon to you too. So we have someone asking about Dixon. Okay, so I see you've mentioned Dixon, but you've not mentioned what entry price you're looking at, or whether you're looking for fresh entry, or whether you have a position. But I'll try my best. So here's the chart of Dixon, and what I can see is that Dixon is a very good stock, firstly, right? It's given a very strong uptrend between 2019 to 21, and since the end of 21 it was in a pretty big downside. However, few days back it came out of that downside and gave a massive rally here. But what now? See, what did I just tell you about entering stocks before the rally, never entering the stocks after the rally? So Dixon is a stock which is now after rally. So what we need to do is firstly wait for the stock to give some solid correction before entering into it. If you already have an active position, I will recommend you, however, to use a trailing stop loss of around 4263. That obviously is a pretty big trailing stop loss of 6%, but given the kind of momentum it has shown, it is warranted. The upside here would be the trend line at around 5191, which is somewhere near the level of 15%. But again, it's slightly unlikely because the stock has rallied really strongly. The whole IT sector is showing some early signs of small correction, but I don't think it is anything to worry about. So there is, I think, in my opinion, 14-15% of upside left, but in order to try and capture that, you will need to maintain a substantial stop loss at this point of time. So Mahesh ji is asking a very relevant question, that how to set stop loss when, how to set target when when a stock is making all-time highs. So Mahesh ji, using technical analysis, usually it's very difficult to set targets in stocks which are approaching all-time highs. A better strategy in that is to use trailing stop losses to keep trailing your position. See, because we don't know where the stock is going to stop if it has broken across all resistances, but we know where the stock has crossed a boundary. Now, for instance, think this is the all-time high of Dixon, and on this stock you need to set a trailing stop loss. Now, setting a target may not be possible because we might not even have a trend line above there sloping, above the highest peak, but there is always price to look at. On the lower side there are moving averages, so for stocks hitting all-time highs and beyond, it's always better to trail them with stop losses rather than looking out for targets in them. All right, Maheshji, I hope that was helpful. We have a query on Voltus now, so let's quickly go and take a look at that. Okay. So we can see that Voltus again is a very good stock, one of the gems of the Indian stock market space. And what I think is that Voltus has been Voltus has been coming down or been in a correction since quite a while, but it might be time for it to start coming out of that. Why is that? See, because I think the correction in the stock has ended in January 23, and the stock since then has been trying to come out. So I have in fact been swing trading in this stock for a while now, and it's been pretty successful. So even the stock has been down all this while, what I can tell you is that since we have been swing trading, we've made around, that's 5, and that is, so around 7-8% profits in this downtrending stock itself using long side only strategies and swing trading. So right now, from what I can see, the stock is taking, so 773 is a good support. So if you want to go long, maintain a stop loss at around 770 on this stock. And as for the upside, the immediate upside is only 4-5%, but I think the stock can go up to the level of 933 to retest that resistance it forged in early May. So we have a very good question from Rajiv Rai. He's asking how to do swing trading in bearish market. So Rajiv, in bearish market, firstly, one thing that you have to adjust is your allocation size. Now you know the broad market dynamics is against you. So reduce your ticket size and start taking smaller bets. It's completely okay to sit on cash when the overall market dynamic is against your strategy, right? So firstly, reduce the allocation size. Secondly, when you're picking up stock trade setups, demand more risk reward ratio. And because obviously the market dynamics is against you, you want to ask the market for more reward versus every unit of risk that you take. So usually I recommend a risk reward ratio of minimum 3 to participate in a stock idea. In a bull market, I don't go lower than 3, but in a bear market, I will demand at least a risk reward ratio of 5. Usually people do the opposite. They will compromise on the risk reward ratio in a bear market just for the thrill of trading, just for the thrill of participating. That's not a very good strategy. The best strategy is to sit tight, wait it out, conserve your cash, and only participate in stocks when you see a very good strategy come your way. So there is a saying in English which goes, make hay when the sun shines. So wait for the sun to shine. Otherwise, if you keep over trading during bearish market using swing trading strategies which are meant for momentum trading or meant for bull market, what will happen is that you will eat away into your cash, and as a result of that, your when the market turns into your favor, then you won't have enough cash left to trade with. Let's just take a quick look at Nifty as the market is coming to a close. I can see that the Nifty is doing pretty good. Okay, let's see. So we've already discussed Dixon, we've discussed Voltus. Let's take a look at Emphasis. So Emphasis is one of the stocks in IT sector which I'm quite bullish on. So I had also in fact made a video about the trade setup in this one, and I was expecting this bottoming out to actually end up in a strong uptrend. That did not happen. The stock came all the way to 2289, which was a good around 15-16%, and then it started to fall again. But now I think here again is a potential bottom, and I think in the short term the stock is looking attractive. So it is very important that the stop loss of 1840 be maintained in Emphasis, and that can be done for an upside of around 2097. So from here, basically, this blue trend line that you see passing through the stock, now this blue trend line is based on some important price points from history, and since the price right now is below it, I think it would act as a good resistance and potentially a good target for Emphasis. All right, let's see. We have a question by Mr. Sajjan about Tata Coffee. Okay, so I see Tata Coffee is edging towards. Let me just turn that one off. So this is how, by the way, I manage my positions. I always have lots of alerts on them, and TradingView gives around 400 indicator alerts and 400 price alerts. So I have a tendency of usually maxing out on my indicator alerts, as you can see. But yeah, alerts are really useful in keeping track of stock movements, because who has the time to look over like over 200 stocks? Okay, so Tata Coffee I can see is already at a strong resistance, right? But this time, will it breach above the resistance? Difficult to say at this point. Okay, so I see the momentum with which it is approaching this level is definitely stronger. So I do think that there is a good chance that Tata Coffee is going to go above it. However, for fresh entry, I will ask you to be a little bit more patient, because as you can see, the market is also at an all-time high. Tata Coffee is also at an all-time high. The underlying momentum is very strong, but the momentum indicators are pretty heated up. And the stock is right now above all moving averages. Now we know there is a concept of mean reversion in the stock market, right? Nothing can keep going up forever. It has to come back down for a rest. So I think just for your fresh entry, I would suggest that you wait a little bit for some correction. Up to where? So the first level would be around 242. The second would be 237. I personally would just put a alert here at the level of 40 on the 75-minute RSI of 25 period. And when I get an alert next time that, see, I'm completely okay letting go of a stock which moves from plus 15% to another 15% more, because I would rather, so here if you see the stock is already rallied 24% from the bottom where I would have potentially liked to enter, right? Because here the setup was very good, very indicative that a new bull run is on the way. But because the price is already far away from that, I am not interested now in risking my capital from what looks like could be a potentially very good idea. So I would rather wait for the stock to come back down to a level where I am comfortable entering it. So that for me would be around this level of 233, right? So either if 233 happens, or either 233 happens, or the RSI comes back to level 40 on the 75-minute time frame, that is where I will look for a potential entry back into the stock, because it is already in an established bull trend. So right now it's a no-go. Okay, so Sajanji, I hope that was useful. Mr. Sharma, hello to you too. You're asking about Paras. Let's see. Okay, so in Paras, I see strong trend in play here. Okay. And right now, again, for fresh entry, it is not at all recommended from my side. Wait for the stock to maybe come back to 570 or 580. That might be a good level. Right now, it's a no-go. Sagarji, KPR Mills. Let's see. Okay, so in KPR Mills also what I can see is that a strong rally is definitely unfolding now. But again, I will emphasize this that the market is at an all-time high. So while the instinct to enter into stocks is very strong right now, it is not a very good time. Okay, it might be for a lot of you the bias or the tendency of greed kicking in and compelling you to enter into stocks. But uh, if you might ask one of my members of EXP-Invest who subscribe to my swing trading services, the number of new ideas that I post right now are quite low because market is already moved, right? So it's very unusual for the market to keep rallying upward and onward. So here again, because the risk reward ratio is not looking very attractive, I will not recommend you to go for an entry right now. So KPR Mill is also not looking good for a fresh entry. Sagar ji, sorry, I don't help with BTST. Uh, HDFC Life Insurance. So HDFC Life Insurance. I know HDFC AMC has been doing pretty well. Let's take a look at life insurance as well. Okay, almost a vertical movement, and I think you already know my answer. No go. Uh, so we've already answered Rajiv ji's query. DMart. So I had a long call in DMart, but that has already triggered profit booking, I think. Let me see. I'm not sure. So charts are taking so long to load up. All right. So we've been long in DMart actually for a very long time now, and just yesterday that position has triggered a trailing stop loss, and we've made a fantastic around 14% in the stock, like very good performance. In fact, ever since the stock came out of this downtrend, we've made 9 plus 15, roughly 24% profits in DMart itself, even though the stock is not really gone up more than 20% since the bottom. But right now, for a fresh entry, DMart is not a very good candidate because it has moved up significantly. It's a very good candidate for a long term, like if you want to invest in it for 4-5 years, it's good. But for short term, it is not, because look at this internal trend line. It's already reached that level and taken, started moving down. So we don't know where this downturn that has started we don't know how long it will last. Plus, the market is at all-time high. So if the market sentiment starts getting soured now, then it will be very easy for the market to slide 500, 600 points, right? Which means the stocks will get beaten even worse. So I would suggest you stay away from DMart. HDFC Life, I have already recommended on that. Sun Pharma. So before I tell you about more stocks, just a reminder that you can join my Telegram channel. To help you out, I'm going to post the Telegram channel link titled Kavita's Telegram channel in the chat. So this is the easiest way for you to connect with me. through this you will get to know about my trade tracking services and my other subscriptions for swing trading. So if you're interested, I also post about the performance of the stock ideas. I also share stock ideas in this platform. And soon enough, I'm also launching my own app. So if you're interested, please do connect with me on my Telegram channel. Okay, moving on. Let's see, we were talking about Sun Pharma for Pramodji. Okay. So Sun Pharma, again, Sun Pharma has moved pretty strongly. So I had a long position here, which has given me around 7 to 8% profits in a matter of 2 weeks. So Sun Pharma has also given a breakout. If you can see above this white line right here, come back down to test it. So if you want to make a fresh position in Sun Pharma, you can actually do it, but please make sure that you're maintaining your stop loss at around 2%, which would be from current market price somewhere near the level of 970. With that, you can make a long position and then hold it for, for quite a while. So personally, I think that Sun Pharma is moving very well between these two trend lines. Okay, I'm going to just make it thicker so you can see it better. So it's moving between these two trend line channels for a long time, right? And even though it gave a small breach here, it has now come back above it. Now, as long as it stays above this trend line, I will believe that the stock is going to go back up and retest the level of 1100, which is around good 15-16% higher. So until and unless right now for a fresh entry here, so I believe that it would either go above the, go and retest the resistance trend line, or breach the support trend line, go lower. So if it breaches the support trend line, then stop loss of 2% is already set at 970, it will take out. If that doesn't happen, then there's upside. So that is the setup which I will recommend to you in Sun Pharma. Let's take a look at HCL Tech. All right, lots of queries today. Doesn't look like I'm going to be able to justify all the queries. So okay, HCL Tech, what a beautiful rally unfolding here. All right, so fresh entry is unfortunately not recommended. The stock is too hot to touch right now. Some correction will be warranted before fresh entries can be made. So we've unfortunately exceeded the time of this session, so I will have to take my leave from you, but I will see you again tomorrow in the Let's Get Technical series, and we can continue the discussion there. So tomorrow at 2:30 p.m. Please do join the Telegram channel, because before I come online I drop a link there, so you'll be able to connect on time and not miss the session. So I hope you found this session useful. Please take a minute to hit the like button under the live stream. It really helps take the stream more to people who can connect with it better, similar profiles to yours. And for any queries about the stock market or trading, reach out to me. I am Kavita Agrawal, and it was really nice connecting with you. Thank you so much for giving me your time and attention. Namaste.